All right, hey, thanks for joining me today. What we're going to do is we're going to take a look at Take-Two Interactive stock, and I'm going to give you some analysis on this gaming platform. Now, keep in mind, none of these are recommendations to buy, sell, or trade any stock, just my own personal opinion, and give you some personal things to think about. All right, so let's kick things off. As we look at this, this Take-Two Interactive, they're basically a huge gaming platform, and they have Rockstar Games, 2K, and some other divisions. So when you look at Grand Theft Auto, this is part of the Rockstar game platforms. So here they got Red Dead Redemption and just a bunch of other games that are shooting related and racing and car related. So that's been doing well. This other stuff, 2K, I'm not as familiar with, but I guess they've acquired this company as well, or this division, which it looks like, there's some other types of games here, which, Wonderlands and some other stuff. And then you've got Private Division. They've got some other games going on. So again, I don't play a lot of games anymore. I used to play some Grand Theft Auto back in the day when I was a teenager, but you can see here, they've got like Word Life, Tasty Town, Word Chef. So they've got some like app-based games that they probably make a bunch of from Social Point. They make a bunch of ads from. So they went ahead and they acquired Zynga. So if you look at Zynga here, this stock is popping around 44%. But that also means that when you are buying something, you are acquiring something, it costs you a lot of money. And when it costs you a lot of money, that stock temporarily will go down. So as you look at just overall the history of the stock, though, since about 2013, the stock has been doing well, right? So the stock over here kind of opened up IPO, continued to kind of run. We've had a little bit of trouble there, sideways action, and then again, that stock continued to move, and so far it's been doing pretty well. So today's move in action, when you look at the bigger picture, it's actually not too bad. And we'll dig into this a little bit more here in a second. But when you look at Zynga here, yeah, this stock's going to pop quite a bit because now it's being acquired. They have to buy a bunch of shares in order to acquire this company. There's a deal. I think it's like a $12.7 billion deal or something that happened. Let me see here. Take-Two Interactive, $12.7 billion. Yeah, acquires Zynga for $12.7 billion right here that you can see. So the question is like, do we buy it? How do we buy it? All that kind of stuff. Yeah, so they went ahead and they're looking to invest. So ultimately, Take-Two is looking to invest in Zynga temporarily. This, let's say you had $100 in your bank account, and now all of a sudden from $100, you go down to like $70 in your bank account because you went ahead and you bought some stuff. And that's what they're doing. They're buying some stuff to be able to grow that business further. It's like buying a printer, buying a computer. Yeah, you got to buy some stuff to be able to make some money. So that's what they're doing, is they're acquiring company. But unfortunately, when you do this and you look at it, the stock is going to sell off hard because there's a lot less cash flow now. They're kind of tying things up. They're changing direction. Some people don't like that. So anyway, point being is, usually there's this temporary sell-off, at least for the short term. Now that could lead to other problems later on, but for the time being, there is some selling pressure there, or they have to, exchange some shares for the deal. I don't know the exact intricacies of the deal, but the point being is they have less money now in their bank account, or shares, or capital, or whatever. So as we look at this company overall, from a longer term perspective, right, Take-Two Interactive, you're kind of wondering, well, do we buy? Do I hold? If I'm in it already, what do I do? Well, here's kind of, the stock's been doing fairly well over here in the 2000s. Then what we had was kind of this sideways action for a little bit, and we had some resistance at these levels. So that level right there for you is right around $30 a share. So as we look at the $30 a share, and this is looking at it, multi-year, $30 a share, this stock had trouble. And now, then it started to break out in 2015 and started to move really well. Then we came in at around $100. There's a lot of stocks struggle at around 100, so it kind of bounced around in that area. And then from there, what's going on is basically we're trying to hold that 100. So it got into about 200, so it doubled up a little bit, and we had some resistance. So let's zoom in on this zone and area and take a look. So as we get in a little closer and we look at kind of the weekly, so check this stock out right here. We go into the 100, the stock's trying to hold that $100 price level. And even here, tried to an attempt to kind of hold that price level. And as we're trying to hold that price level, it got some buyers to step in. We broke through about that 135, 140 level. Stock continued to move higher and then reaching about $200 a share. So remember, this kind of doubled up between 100 and 200. We had to double up. And when you double up, now all of a sudden, it could get a little bit expensive for some people. So with that short time frame double, the stock or the company decided to kind of acquire this Zynga. So as we look at the shorter term, yeah, of course, this run right here is extended. We got into past the 200, and you've got some technical resistance right around that 185, 183 level. So now, as we look to this stock recently, let's go to kind of a 2-day. What I want to show you is that right now you do have this pullback, but you also have some nice support levels right around 140. Now we are breaking that level right now, so it is acting weak, but these things, remember, they could snap down a bit and get right back above it. Technical support, resistance, they're not an exact price. You could look at specific days of an exact price, but usually you want to give it a range. You got to give it wiggle room. The probability of touching something is much higher than just kind of going down and then bouncing right back up and expiring against something, right? So when we look at touching, it can touch it and still hold that support towards the end of the week. So we don't know. But if this does start to pull back a little bit, the area of concern that I'd start looking at is that, okay, so yeah, we are pulling back. The volume is picking up, okay? But the question is are we gonna come back above this a little later? If not, I'm starting to look at around the 130. That's kind of what I'm looking at. We've got a descending trend line as well here over in the top area here as I look at, again, this is a 3-day, so I'm looking at a little bit of a longer time frame just to kind of get rid of the clutter. But about 130 is kind of, okay, maybe it'll start getting interesting there. If I still have trouble there, let's go into the weekly. So now I'm looking back a bit, and I'm starting to look back at what are some of the other technical levels that I've had going on in this stock. So here, and this is a key point right here, there's that 130, 140, and look, there's a lot of that stuff lining up. And if we break below that, you know, you can start looking back to about 100, you know, those kinds of levels, and that can get a little more nasty. And in between there, you might have some shorter term temporary swing points, like these swing points that happened over here in 2019. And that could be around 125 and so on. But that's just really, hey, buyers could just step in at any point. So for now, one day doesn't make a trend. I don't freak out about it with a 1-day move because these things can easily, hey, next day start going back up. Investors could like it. But initially, you know, you might get something that's going to be a downdraft bar on a company acquisition. That's just normal. It's healthy. It's going to happen because they're buying out for like $12 billion another company. And yeah, it's expensive. But check out this 135 level. Check out this 152. We broke it. We've got 135 right now that we're kind of looking to come into maybe. So those are some of the key points right here that if we can't hold that level, because the highs here, if we look at the highs, 139, which is basically 140, 138, so 139 again, 139.60. So yeah, I'd look at about 135 as kind of, let's see if we can hold 135. If I look at this level right here, this swing point, let's check this out, where it was 135.70, 134.41, 134.74. So those levels is another level right here. So 135 kind of, and give yourself like a 133 to 137 range is kind of what you're looking at. And if it breaks below that, then you might need to reevaluate how fast is it breaking below that. But for now, it's kind of okay. It's hanging out there, and we'll see what happens. If that volume starts picking up and you start seeing some nasty selling pressure, like down here, that could be a little bit more of a problem. So always be a little more patient with what's going on and happening with these kinds of stocks. Anyways, if you want to look at how to trade this, maybe take a look at my options channel. There's a lot more things we deal with options. I probably trade this like with a 50-50 spread, like a vertical. If I'm looking for a bullish move, if I'm looking for a continuation of bearish, same thing, just maybe more on the bearish side. You could trade like a speculative butterfly as well, maybe on the upside or the downside, but those are a little bit more difficult of trades. So anyways, that's my personal thought on just overall the company. It's normal because when a company gets acquired like this, they got to use a lot of cash flow or a lot of shares, and it costs money to make it happen. So here we're selling off. That's normal, part of the process, and we'll see after a day or two. What you want to see is, are we going to get kind of the sideways action? Are we going to get a snap up? Or are we going to get kind of a continuation on this downward move? Because if you get a continuation, that's the problem. If you get some sideways action, you know, even slow trend and slight turn around, that's a lot better. But if you see further continuation down, that's going to be an issue. But what you really like to see is just, hey, okay, we get it, and then we'll slowly start going sideways. So the point is can we get some sideways digestion? That'd be nice. But usually it takes a week or two for that to kind of evolve. So give it a little bit of time to let it evolve. Anyways, thanks for joining me. Enjoy the week ahead, and I will see you in the next video and episode and analysis. And if you want to check out my other channel for option trading, check it out at Traders Fly on YouTube or the website tradersfly.com.